Hey, it's Mack with PriceActionTradingSystem.com, and today is Wednesday. It's March 19th. This will be our chart lesson for today. And today is FOMC announcement day. This is a huge news item that one you certainly got to be aware of. And normally it comes out right about 1 o'clock. There's some other Fed stuff that come out with it, but the FOMC news is which is basically the Federal Open Market Committee rate announcement. That's what drives this thing for the most part. But this is a typical day that you'll see like that. Prices will just be in a trading range, and generally the lunch hour right before 1 o'clock, sometimes it'll just get down to basically doing nothing. So the market moved a little bit early, and then it's just been a slow down move to the other side of the range this afternoon. And like I said, this is fairly typical. Um, I like these kind of days because they are fairly predictable. Um, you know, it's easy to see the high of the range, and the lows are just as easy to see here. You don't know exactly where this is going to bounce, but it's going to bounce generally somewhere in here, and you just wait for the break of the trend channel and attempt for a new low or a trap or something, and then you can go long or whatever. And the same thing on the upper side. Notice that I marked the first entries because if you recognize what's going on, they're good trades to take, but they're a little more risky than waiting on the second entry because you don't know that we wouldn't turn up here and then turn back down and, you know, make the low down here where the last closes were. Generally, that's what you'll shoot for is the last closes, and they were here, and you see we just got maybe a tick further than that. We couldn't close below that. And so here were the last closes on this next trip down, and you see that's where we kind of made a little double bottom. I still think we probably will get a break of this channel here. We might have had a close outside it right here. This might be a little bit lower like that because I'm using those two and that green. And so we might have had the close out and the move to the retest here, but it wouldn't surprise me if we don't get another shot down in a retest here. But generally I'll move this up as we get the closes. And it just doesn't look right there, but you never know. We really struggled to get it down to here, so you never know how it's going to play out. But right now I would call this the lows of the range. And I would suspect that we'll get a break here and one more move down to test these lows before 1 o'clock. It's straight up noontime, my time for the most part right now. So we'll see what happens, but I'm not going to hang around for the FOMC news. I finished my trading. I also took a couple of demonstration trades, which I'll put on here and show you those as well. And but let's just go ahead and talk about the trades and get the stay over with and see what happens from here. But we had a channel working up here. It's a nice measured move for the most part, two legs up, and it looks, by the time I came in, we were right in here and all this mess right here. So it looks really, like a congestion, little small trading range basically. And you can see the matching highs here and really the matching lows down here. But we got this channel coming up, and that's the first break, and we tried to go lower. We got a new low here. We tried to go lower once, twice, so that's a failed second entry short. It's a trap somewhat, and then it reverses and goes up. This bar is too big to enter up here. It's too close to the high, so the only really thing you could do is when this broke higher, drop a limit order back in here, and usually what I'll try to do is get back somewhere close to the last closes, so maybe a tick above that, and you see they would have come back and filled you, and then it goes up, and it's an easy scalp, quick easy scalp. And then of course we make this little double top here with the closes, and we get that one tick higher and it turns down, and I had a stop here ready to go in case this breaks on out, but it doesn't. So it ends up being a lot of overlap, and you didn't really close, and it closes back up in the middle. So what you got to do is wait for this bar to finish or wait on it to break lower, and if you're real confident that we're not going to push up any higher, drop a limit order in there, and you could have gotten filled all the way back to here, I believe, maybe at least one tick in front of that close again. And But if you want, wait on this bar to close, and it didn't close on its low again, so I would wait on a break below that and then maybe drop a limit order and see if you could get filled. Um, Going short on a stop there's a little bit iffy, but you can see it's confirming that trend line. We've had a couple of touches, and this kind of confirmed it. But if you didn't go there, again, I drew that one in green for the reasons we talked about. It's not a ideal setup, but it is a double top on, and you've had a break of this little channel and a retest, and that little trap right there. So, but it's a little aggressive. This was the first trade I saw that really wasn't that aggressive, and even this one was questionable. But the reason I really kind of like this one is because it's coming right off the trend line again. Just wait on it to break lower and then drop a limit order, see if you can get filled. You really could go short on the stop because you got enough room here to come down to get out before you get down to this next support, and the next one's even way down here. And you figure you're probably coming down to test these lows right here. And this was a quick, easy one, really. It was one of the better trades of the morning as far as how quickly it took off, to be honest. And then you get the bounce down here. It's a second hit. You got one leg down, a little pullback, a second leg down. So it's like a little two-legged correct measured move there, just like the one on the way up. Aggressive traders probably going to take a break above this, drop a limit order in there. We really don't have a break of this yet, so it's real aggressive, but now you get to break here, and then you kind of come back and retest. And the fact that this one broke out higher, I kind of like. You could have just used a stop, but you might have used a limit order, and you see it would have come back and filled it, probably all the way back to right here. So just depends on how you wanted to enter that one. This really like a you really get your second entry right here, but this is like a little pullback as well, like a little breakout pullback long from this. So you might have even considered entering there, but it's right at the EMA. And there's, you don't know that you won't pull back one more time. But I really should have probably marked that one too. So let me just go ahead and do that because it's like a little breakout pullback long. And it's really probably the safer bet versus entering on this second entry long. Then you get a failed second entry short. Notice the new low, first entry short, pullback, second entry short. But notice how big this bar is. This is another one. When it breaks out, you're so close to these previous highs that you just about have to use a limit order here. And you would have gotten filled all the way back to right here, and then it runs up and makes its new high. This is the first real break of the channel. I don't know if I would have counted this one. And, it could have been that this is over here like so. So I'm wondering if some people didn't see it that way, but really it's usually off those first couple of swings, which encloses, which is right here. And this is just like, and this may have been the break and all you needed, but we really did get a break here at a new high, so it didn't matter how you really saw that. But that's what I think we were looking at. It fits real well on the upper side, fits on the low side till you get this little retest here. So again, it's a little aggressive here. You can't enter on a stop hardly right here on this big of a bar, this close to this high. So you need to get back a little bit, and that's why I drew it in green. And then of course this is the first entry off the top. You got your break, your new high, and we find resistance right here at the same place. It's the third touch. This one's a little bit less aggressive than maybe entering on this one, because now you've got a double top. You got this high and you've tested it twice. It's turning down. It's still aggressive because you should wait on the second entry, which didn't come till here. And this was the first one. And I didn't like entering below this bar. I waited on this bearish one and just enter on a stop right there. Quick, easy move. Then you pull back and you get a failed second entry long here and a short here. Looking at this one now, you probably should have used a limit order because there are two dojis here, and this one's inside the other one. But it kind of confirms that trend line. It is a trap, and usually these traps will take off really quickly, and it just didn't happen. But then you get a second entry short here and another chance. And so you could have added on here or taken your first trade here if you didn't take the trap. I was a little disappointed in this trap. I thought this would catch a lot of people on the wrong side, but I guess it didn't because they had to bring it up again, and it still took a long time. I actually entered on the stop here, and looking back, and I wish I would have used a limit order, and I would have been out a lot quicker. And I think that's why this bounced so fast, because there was a lot of buying here, people exiting on their scalps, most likely, because this broke lower. But there is, by this time, there is a trading range here, and it's like a breakout pullback short too. So, but you don't want to be going short down here close to this line. Uh, so if you didn't get in up here, you got to skip this trade. And then again, a two-legged correction back up, and again, you get the overlap. But when you get this big bearish bar, either put a stop right here or wait on it to break lower and put your limit order a tick or two back in, and you would have gotten filled a tick in. I doubt you would have got filled two back in on a limit order, and then it moves on down for another easy scalp. And now I would suspect that we're going to come back and make this new low here, but we'll just have to see. But that's what I saw today through lunchtime. No other setups so far, but that's what I was looking at. Let me put the two trades on here that I took, the demonstration trades. And you can see, actually, I guess I did use a limit order here. I waited on it to break lower and I dropped it. I just didn't, I could have gotten a lot further back. So yeah, I did use a limit order there. And you see I got out right there. Wouldn't have mattered even if you use a stop, I don't think. Stop you would have been in at 1865. And it would have failed. You would have had to ride it out a little bit more. So I'm guessing that I used the limit order here because that was such a big bar. I was thinking that I did, and it was over here that I wished I'd have used the limit order. So, but you could have used a stop here. It still would have worked. You would have just had to ride more of this stuff out. Easy scalp right there for the most part. And then, and I like this one, even though this is a first entry off the low, it's a fail. Notice your new high, first entry long, pull back. There's a second entry long. It fails. Usually on those traps, it takes off real fast, and I didn't want to miss this trade. And at that point, I really had this down here like so. It may still be down there. I just kind of moved it to where it fits better on both sides as the price action, as we got more price action. But I just entered on a stop right there, and you see I got filled right here with plenty of room to spare. But looking back on this, I probably should have used a limit order here too, and I would have probably been out of this a lot quicker, although it wouldn't have made a whole lot of difference. I'll be honest with you, I almost scratched this one when it came down here and bounced again. When it started coming, when it finally got back into the money and it started bouncing, I almost scratched this trade. But you know what? This is not rejection off the EMA right here. This is just a little trading range. So it's kind of acceptance at that prices at that level. There's a clear trend line there. It's holding. It fits nicely. I just kept telling myself, stay with the trade, stay with the trade. And of course it worked out. And you could have gotten a little bit more out of that than actually what I did. And so there's your two demonstration trades, and you really would have had another easy one right here as well. And I'm guessing we're still going to make another move down here to these lows. We'll just have to see how it plays out because it's already 12:15. So in 45 minutes, we're going to get some, this thing's probably going to go crazy. Most likely, even if it's not going to be a huge announcement of any kind, you're still going to get some emotional movement most likely, and this thing will kind of get crazy for a little bit. So just if this video is uploaded by that point and you're not aware that it's FOMC News Day, make sure that you're prepared for that. But that's what I saw today. There's the two demonstration trades, two shorts on the way back down off the high of the trading range. And notice I took the conservative ones. I took the second entry off the high, and then I took the trap. And this one didn't really act like a trap until it went higher again. Then you could tell And I think the only reason it didn't drop real quickly on down from here was because most people that took this short here did not get in as low as I did. They were smarter about it and they got in with a limit order. There just weren't enough people trapped here. There weren't enough people fooled. So it took a little while to work it on down. That's what I get after the fact, but you don't know that. Most of the time these traps are going to take off really fast like those two bars did right there. So just be aware of that. But I'm going to wrap it up and call it a day. Not much else you can say about today. Just be prepared for the FOMC news, and we'll be back. Actually, one other thing, there's probably not going to be a chart lesson on Friday. I'm going to say it now just in case I forget tomorrow, but I'm probably going to take a 3-day weekend and take Friday off. I'm going to play in a golf tournament most likely. And if I decide I'm going to play, I won't be here Friday. I won't trade, and I'll just take Friday off. So if no video Friday, you know why. I'm off playing golf somewhere and enjoying some time off and taking a long weekend. But if for some reason the weather doesn't look right or I decide I'm not going to play, I'll probably be here Friday working. And if I'm here working, we'll do a chart lesson. But just a heads up in case I forget about it tomorrow. But that's it for today. I'm going to get out of here before the FOMC news comes out. So we're going to wrap it up. But this is Mack with PriceActionTradingSystem.com, and we'll see you next time.